Here, we turn agent payments into a practical workflow. Read an invoice, prepare a USDC transfer, execute it with safeguards, and preserve a clear audit trail. The goal is business-ready automation, not just a wallet transaction. So far, you've connected 3 layers: agents that can reason and use tools, wallets that can sign and submit transactions, and assistants that can initiate on-chain payments. Now we'll turn that foundation into practical USDC workflows for invoices, payouts, business operations, and auditable payment records. Agents need money they can use reliably. Stablecoins like USDC reduce crypto volatility while preserving blockchain programmability. That makes them useful for paying invoices, running subscriptions, sending payouts, and triggering smart contract workflows with predictable value. Before any USDC payment, the agent has to identify the exact network. USDC on Ethereum, Base, Solana, or another chain is not automatically interchangeable. The workflow should verify the token contract, recipient address, token balance, and gas balance for that chain. It also needs to convert human-readable amounts into on-chain units, often using 6 decimals. Many failed payments come down to one mismatch: wrong network, wrong contract, wrong address, or wrong decimal handling. In production, an agent payment is more than send USDC. The workflow begins by turning a chat request, invoice, or system trigger into structured payment intent. Policy checks then validate the recipient, amount, category, and approval requirements. Only after those controls pass should a wallet or signing service execute the transaction. Finally, the system tracks confirmation status and stores metadata, transaction hashes, and business context for auditability. Stablecoin workflows are especially useful when payments are frequent, conditional, or international. A contractor can be paid after an approved milestone. A creator can receive tips or subscription revenue quickly. Tiny API or content payments become more practical. For payroll and cross-border transfers, the key is not full autopilot. It is automation paired with approvals, audit trails, and compliance checks. Invoice extraction turns a messy document into a payment draft the system can reason about. The agent reads the file with OCR or text parsing, then identifies fields like vendor, invoice number, due date, amount, currency, wallet address, and terms. Just as important, it should not pretend every value is certain. It flags missing or conflicting details, keeps references to the original text, and then produces structured JSON for review and payment preparation. Once details are extracted, treat them as untrusted until validation passes. Confirm the address format and intended blockchain network, because a valid address on the wrong chain can still lose funds. Match the vendor against trusted records, prior invoices, allow lists, or signed messages. Then check for anomalies such as changed addresses, duplicate invoices, unusual amounts, or odd terms. If confidence drops, stop automation and route the payment for human review. With validation complete, the agent still should not send money immediately. It creates a payment draft that can be inspected, approved, and signed. The draft converts 5,000 USDC into base units, using USDC's 6 decimals, identifies the chain, token contract, recipient, and funding wallet, then estimates gas. It also checks 2 balances, USDC for the payment and native ETH for fees. Finally, attach invoice, vendor, project, and reason metadata so the preview is auditable. Automation is safest when every payment passes through policy gates before execution. A small payment to a trusted vendor might clear automatically. Higher amounts, new recipients, unusual invoice types, duplicates, or risk alerts should slow the process down. The workflow can approve, block, or escalate to a human reviewer. It should also explain the reason for that decision, so finance teams can audit outcomes and refine the policy over time. Execution is the point where safety controls matter most, because the transaction cannot be casually undone. The agent should never hold private keys or see them in prompt context. Instead, it requests an approved payment, and a protected signing service creates and submits the USDC transfer. From there, track every state: created, signed, submitted, pending, confirmed, failed, or replaced. If anything times out, retry with an idempotency key so recovery does not accidentally send twice. A strong audit trail connects the business request to the final blockchain settlement. Start with the intent: invoice, task, project, vendor, and memo. Then capture the on-chain facts: transaction hash, chain ID, token, amount, sender, recipient, and confirmation status. Add approval evidence, including who approved it, when, which policy checks passed, and the agent's confidence. Together, that record lets finance, operations, and compliance reconstruct exactly why the payment happened. After submission, treat the payment as unresolved until the chain proves otherwise. Watch for the transaction to be mined with enough confirmations. Then verify the token transfer event, correct contract, recipient, amount, and invoice reference. Only then should internal records move from pending to paid. Reconciliation links the invoice to the transaction hash and events. If anything is delayed, replaced, failed, or mismatched, alert operators instead of silently closing the task. Payment agents should be engineered with the assumption that things will go wrong. Some failures are technical: wrong chain, low gas, stale quotes, duplicate invoices, or token decimal mistakes. Others are adversarial: fake addresses, prompt injection, or compromised approvals. The safeguard mindset is simple: constrain what the agent can do, verify before value moves, and make every payment idempotent. When confidence drops, the agent should pause, explain, request review, and never retry blindly. Stablecoin payment agents are strongest when automation and accountability move together. USDC gives predictable settlement, but invoices still need extraction, validation, approval gates, previews, and monitoring. Every payment should link business context to on-chain records. Next, we'll build on this with wallet-based authentication, personalization, and deeper guardrails.